All right, let's go ahead and get started as folks are continuing to join us this morning. Good morning. I'm Pam Tipton, Director of Custom Programs here at the Goizueta Business School, and we are so happy to welcome you to our third Business Over Breakfast webinar in 2022. So thank you for joining us this morning. The past few years, of course, have been just a whirlwind of changing tides and pivots and ever-shifting economic and financial landscapes. And it can often be hard to know where we're headed or what to expect of our local and global economies. However, analytics can provide us important indicators that we can look to in an effort to better understand what might be ahead. Our presenter this morning is Kirsten Travers-UyHam, an expert in using predictive data analytics to gain insight into what might come. And we're really excited to have her join us this morning for the topic, Future of Finance, using analytics to see the big picture. Kirsten is Associate Professor in the Practice of Finance here at the Business School and also the Academic Director of our brand new Masters of Analytical Finance. She's an expert on investment strategies, asset allocation, derivatives, risk management, as well as the founder and managing partner of RiverCam Partners, a private investment and risk advisory firm, and with deep experience in the investment banking and hedge fund industry. She was most recently director in global risk at Bear Stearns and has focused on developing and implementing practical methods for global trading strategies, risk measurement, and hedge techniques. She holds BA and MA degrees from Oxford and a PhD from Duke. We're excited to have you with us this morning, Kirsten, and we look forward to hearing your expertise. So Kirsten's going to spend about 30 minutes as usual, 35 minutes, sharing her insights. And we really invite you to put your Q&A, your questions to Kirsten. She prefers to use the chat so she can see all of the incoming both comments and questions. So if you'll put your questions in the chat today, and don't worry if you put them in the Q&A box, I'll move them over to chat for Kirsten. We'll do the best we can to get to your questions. And at the end of today's session, we have our quick 2-question survey. We love to capture your key insights from the session. So we hope you'll take a couple of minutes just to fill that out. Enjoy your time with Kirsten, and I'll see you at the end. Kirsten, over to you.
Thank you very much. Thank you, Pam, and thank you, Goizueta Executive Ed, for asking me to come and speak this morning. This is the first one of these that I've done, so it's very exciting, and I'm happy to meet everybody virtually, wherever you may be. So I want to keep this really interactive, so I think a fun place to start, if you would put in the chat where you're joining from, and then also, as something just to give us an idea of where everybody is, would you let us know, I want you to let me know, when was the last time you went on an airplane to travel internationally and which continent you were going to? Just so we can have an idea of how everybody's back to normal life. I know I'm looking forward to getting back to traveling and eating out with my family and going shopping in a normal way. And these are some of the things that I know everyone's looking forward to as well. To introduce myself, I won't put my answers in the chat. I'm originally from Cambridge, England, but I'm joining you here this morning from Atlanta, Georgia, where I live and work. And the last time I flew internationally was in the summer of 2019, and my family and I went to Japan. We went to Tokyo and Kyoto and Kyoto and had a wonderful time. Probably all the more wonderful because we didn't know that it was going to be the last time that we could go abroad for a little while. Oh, I see that some people have been a little more recently than that. Pre-pandemic travel, people say 2018, Jamaica 2019, that's lovely. I know this is something we're all looking forward to getting back into. So one of the reasons why I'm looking forward to talking to you guys today is because in my usual work and in teaching and working in the investment industry, we usually only get to have an audience and a conversation with people in the same sort of area and industry as us. So one of the exciting things is here to have a conversation with you all from all sorts of different industries. So as I was thinking about preparing for today, I was thinking that even though you may be all living in different places, on different time zones and working in different types of industries, what do we all have in common? So I spend a lot of my time working and thinking about finance, but actually it's an industry that affects everybody in their regular lives all around the world. So maybe you have a savings or a retirement account. About half of Americans do, and over 80% of people in Japan, where I last went on vacation, do. Perhaps you're thinking about borrowing money to try and buy a house, or maybe you have a child that you want to take out some student loans for their tuition in college. Maybe you want to buy a car. These are all areas that are obviously affected by the finance industry. And then also, it's an industry where we're just always trying to figure out how the world is changing. Things come and go. Prices, I know we're all aware of the prices and inflation going up at the moment. If you're going to try and buy avocados or fill up your car with petrol, a lot of things are affected by this industry that I live and work in. So let's keep it very interactive. If you have, like Pam said, if you have any comments, then please put them in the chat, and I'll try and keep an eye on that as I talk to you about some of my ideas of how our whole looking for answers in the financial industry is really can be simplified by looking at the data, looking at analysis, and cutting through the noise to really see the big picture and gain big picture insights and may help us make decisions. So I will share my screen here with you and we can get started. And if you have comments or questions, as I said, I'll keep my eye on what's going on there. All right, so hopefully you should see my, my slide here. Let me just get the chat back again. There we go. All right, so as Pam mentioned, we've been through a lot in the last few years, and there's been a lot of turbulence going on in the world, in the financial industry. So let's look towards the future. So here's my 2022. This is actually, as I was preparing for this talk, I went out into my neighborhood in Brookhaven in Atlanta, and there's a photograph on the left there of the Kroger that is about a quarter of a mile from my house. And you'll see as I was looking to buy different kinds of water and some juice, you'll see that, as I'm sure a lot of you are, bare shelves in the supermarket. The photograph on the right is showing the shortage of commodities, giving you a sample of the shortage of commodities and products that people are using. So this is a house that's been being built over the past year. It's kind of comes and goes in lurches of activity because they're having trouble actually literally finding the bricks and the mortar to build a house. And something that's quite interesting about this picture is you'll see not just in the absence of what's missing there, but you can see very clearly the gaps in the house because there's actually a worldwide shortage of glass at the moment. And this is a particularly interesting example of some of the shortages we're seeing because there isn't actually any shortage of the materials needed to make glass. It's literally purely a supply chain problem. So we're staring at this house. This has been like this since November, and every time we drive past, we're staring at this house that is waiting for glass to put in the windows. And obviously, the person that wants to move in is impacted, the builder is impacted, and everything is waiting for that glass to come across the ocean. So you can see here that there's a lot of transition going on, and what investors try to look for is to see where the prices of these things have some inefficiencies. Economists try to look into the future by analyzing data that's out there, global data, and try and look for patterns in it that give us some insights of where the trends are taking us in terms of how things will work out in the future. And so we can look to economic data. There's a lot of it out there, much of it given out by government agencies around the world. So if we're trying to look at how we're going to roll out of this crisis, maybe see how the global economy and the supply chain is going to pick up again, one place you might want to start is saying, well, what economic data is there? So here I've pulled up a screen for you from a Bloomberg terminal, which is a platform of financial data that people use in the industry. And you can see here that this is this week's, just in the United States, upcoming reports of different kinds of financial and economic data that will tell us about what's going on in the market. And you can see this is just a couple of days from this week. So there's a lot of it coming. You may hear in the headlines that there's a PPI report, or there's a CPI report, or there's an unemployment report coming out. And all of these things give us important information in a very raw, technical way with numbers and percentages. But the important thing to notice about this is that these data reports that are coming out this week, look at the period that they're talking about. So this is giving you information of producer prices, retail sales, import-export prices for January of 2022. Well, we're already in the middle of February. This is dated information, so it's not going to give us the kind of impact that we need to look forward in the short term and be able to understand where we're going. So if we're trying to figure out what the market is expecting, we need to be able to see how the impacts are working in a shorter time than that. And that's the wonderful thing of what is now available in very recent times in the financial markets and economic data. So I got a question for you here. Does anyone recognize what this is a logo of? Put in, if you recognize this app logo, then put in the chat any ideas that you have on what it is. I'll give you a clue that, yes, Jennifer's got it right already. I'll give you a clue that since it was Valentine's Day this week, possibly some of you may have used this app to book somewhere to go out to have dinner on Monday night. So Joan knows it as well, exactly. So you're all good app users. This is the Open Table app. And this is for those of you who don't know Open Table, it's a company that has partnerships with 54,000 restaurants worldwide. And if you want to book a table at a restaurant, you can do it the old-fashioned way and call the restaurant, or you can open the Open Table app and book however many seats you need at the restaurant for whatever day and time. It's also a good way, thinking of going back and getting on the road and traveling. If you're going to a city that you're not familiar with, it's also a good way to see what kind of restaurants there are around you. So the reason that I'm pointing this out to you today is because the way we're now living, everything is tracked electronically. And the kind of data that we offer to companies like OpenTable is absolutely real time. If I open this now, I can book a seat at a restaurant for a couple of hours time down the road. And OpenTable has identified the power and the information that they have by facilitating our restaurant bookings. And they actually have started, since the pandemic, they've actually started packaging and cleaning and reporting this information in the OpenTable Restaurant Seatings Index. So this is my first key graphic that I'd like to show you today of how data that isn't traditional data, and it's actually called alternative data, this sort of new type of real-time data that there is, and how much information it can give us without waiting around for government agencies and different types of monthly stale reporting. So let's have a look at what this is telling us, because it's telling us a lot of information here. So it's giving us a graph of how the seatings globally, how the bookings that are made either on their app or by telephone or in the restaurant compare to the same date in 2019. So let's think back to our 2019 selves, where we didn't think about quarantining or lockdowns or any of that. This is showing how today, so if we look over here at the most recent data of today, how many bookings the world is having today compared with the same Thursday around the 17th of February, whatever that Thursday was in that same week of February, before the pandemic started. So if we look back here to June of 2020, you can, I don't know if you've blocked it out or you still remember that we were all pretty much locked down globally. And so restaurant bookings were down 90% then compared with the same date in 2019. And as we walk through in time here, you'll see that, different countries and cities got finished with their lockdowns, let people out. So restaurant bookings globally started to go back up again. There were a couple of times here, and it tracks very closely with what the pandemic was doing. If we think back to that beautiful time last summer before Delta arrived, you can see here that that's one of the few times that restaurant bookings globally were actually up compared with 2019, because we'd all been sitting at home for a year and we were desperate to get out and it seemed safe and all of these things. So you can it tracks very closely with the pandemic, but it also tells us so much more than just who is booking a table at a restaurant. So you can put in the chat if you can think of something else that this might tell us. I'll just give you a few examples of what it tells me. It gives us an idea of consumer confidence. How confident are people to actually go out and sit in a room with others? Health and safety. So the way different countries have reacted to the pandemic affects whether people are going out to restaurants. So in China, if there's a very strict zero COVID policy, then their restaurant bookings will still be very low. At the moment, Hong Kong is having a surge, and their restaurant bookings on the Open Table Hong Kong index are very, very low. Whereas when parts of Europe and the US ended the lockdowns earlier and tried to more live with the pandemic, and people got out there and started spending more, their employment, this gives us an idea of employment. As Howard's saying, this gives us an idea of consumer spending. So do we wait around waiting for the February consumer spending index to give us an idea of how much people are spending? Or do we look at this in more real time? It gives us an interesting idea of the demand for restaurants, not just eating in a restaurant, but what is the demand for all of the ingredients of all of the materials that people use to make their restaurant dinners. It gives us an idea of what the supply chain is doing in real time. Are people getting on trains and planes? Are they traveling? Are they having that vacation that we're all looking forward to? It gives us an idea of the demand for the fuel to either take people to the restaurant or to take the food globally to restaurants. Howard's got another great idea. Retail growth, absolutely. This gives you an idea of real-time retail growth, ticket sales for commercial flights. If you look at some of the regional restaurant indices, it tells you maybe before the airlines are going to report their earnings, it tells you what the demand is for those public transport. And it also gives you an idea of business activity between countries. So the relative strength of different economies. And so obviously that there's a whole market of currency and foreign exchange market that affects. So there are many, many factors encapsulated in this in real time. And it's just a wonderful way to show you that we don't need to worry about 20 different economic reports that may come out over the course of a month. If you're on the cutting edge of finance, you will identify a few of these real-time alternative data sources and use those, combine those according to your investment strategy to give you some really clear signals ahead of the rest of the traditional financial markets. So this is just one index here. There are other ones, there are other real-time reportings. There's a Pret index for the restaurant Pret-a-Manger that is in different global business hubs around the world. So, and then who else has this data? We may not realize how much data we're giving to everybody about ourselves. So I pulled together a slide here that just shows you places that I've been or interacted with in the last few days. So you can probably guess where I do my grocery shopping. You can probably guess which airline I've booked a flight on to be able to go somewhere in March. You can see here which credit cards I've used, what kind of computer I have. But I have told these companies what I'm eating, what I'm wearing, where I'm traveling to, who I'm paying, what kind of food I like. All of these companies have valuable data about all of their users. And what they are doing is harnessing that data without paying us for it. They're harnessing this data to get insights about their customers, and alternative financial data uses all of this same kind of real-time data to give us a lot of information about the economy, the global economy, and what's going on in the world. And at times that there's a lot of flux going on, like right at the moment in the world economy, where we're trying to figure out what will oil prices be doing, what will happen with supply chains. It's this kind of really important real-time information that gives you the insights that traditional information doesn't. And there is lots of this kind of stuff out there for sale. So there are drone photographs of Walmart parking lots where they try and understand what the Christmas shopping rush was like. There are employee car park photographs taken by drones, or the airport car park at Newark Airport to try and understand what airline earnings may be. Credit card swipes at the Eiffel Tower gives you an idea of how strong the euro should be this summer. Drone photographs taken of oil tankers in Cushing, Oklahoma, give us an idea of what oil demand will be in the coming few weeks before any of the traditional data comes out. So what I want you to take away from this and that open table index is that instant economics isn't really about clairvoyance and being able to tell the future. It's just to have better real-time information so we can make rational decisions without having to wait for the delays. The wonderful thing about this is it seems democratized, right? It seems that everybody can have access to this data, but really some of these indices, whether you find them on Bloomberg or different financial platforms, they're not free. They come to a select few professionals, not really to the retail investor, not really just to the person who's wondering when to fill up their gas tank. And it takes some acumen and skill to know what to do with it. Having data, having lots and lots of data doesn't get you anywhere unless you have the tools to work that into your strategy and your decision making. So that's a really important new transformation that's going on. I agree with you, Linda, we must like some of the same things. Thank you for your comments about that. So I'm going to switch gears now and talk for a few minutes about banks. So maybe you're not interested in making investments in the financial industry, but we're just all living our lives, and our lives for the last few centuries have consisted of using a bank as a place to save our money, to put our money to make sure it feels safe, and to have transactions with other people when we want to buy things or sell things. And this information is being stored by the banks as well. All of the information I talked to you about a moment ago, the banks have all of our transaction information, and it hasn't changed very much over the centuries. So what I want to show you here is a couple of photographs, and I want to ask you, please put your answers in the chat. Tell me what you think either these photos are of. Obviously the one on the right is probably something that's in your back pocket at the moment. But tell me what you think these photos are of and why we're talking about them this morning. What you see there, and what you think of what's up there. I'll give you a couple of minutes to squint at the one on the left. So I'll give you a clue. There are some similarities about the two of them, and there are some differences. So yes, so Al says telegraph. That's spot on. The photo on the left is a photograph from 1871, so about 150 years ago. This is a Western Union telegraph office. It was actually taken close to San Francisco. So when there was a gold rush and people started to move from the eastern side of the US out to the western side and develop and industrialize cities out there, what Western Union's product was to build a telegraph line for communication right across the country. That's right, Howard. It was an early method of communication, and people sat and sent telegraphs so that it was faster than sending a letter by train or another way. So this is a group of people standing at the Western Telegraph Office, and what people realized when people started to settle on the western side of the country was that they also needed a way, if they went out west and earned money or made lots of money, they wanted a way to be able to send it back to their families in the east. of the US and share their earnings with them. And so Western Union pretty early decided that they would also use their telegraph wires as a way to transmit money. So we've got 1870s on the left, and the fee that they charged for sending money across the US by these new telegraph wires was a 3% fee for sending your earnings across back to your family. On the right is a photograph of a wallet that we may all have in our back pockets right now. And you can see various credit cards in there. You can see the Visa logo. And this is something that we're all familiar with. And the fee that credit cards charge, or bank cards, to wire money or to withdraw money, is also a 3% fee. So over 150 years, there has been no change really in how much a banking institution is charging for you to have the service of moving money around. So banks can merge and change different names. They get new logos, have new products, but fundamentally, nothing has changed about the way that they are charging us as consumers to do business. So there's obviously a really big opportunity here, because if you think over the last 150 years, almost nothing is the same about how we send information with computers and transport and the speed of technology. There is really no good reason why the cost of sending money in any currency across one country or across the world should be the same as what they were charging 150 years ago. And why does this matter? Well, it matters because this shows that there are great inefficiencies that can be taken advantage of. And that's what's starting to happen with the fintech industry that you may have heard people talking about the name of. So what I want to tell you is what that actually means and how that's affecting all of us. What it's doing is the fintech industry is democratizing finance for us. So the second key graphic I want to show you is this picture here. And it shows how finance has changed over the last 300 years and what we're absolutely on the cusp of now, which is affecting us all in the plumbing of how we do our financial transactions, and will become more apparent to the way we actually interact with people in the coming years. And it's all based on the analytics and the big data and the way that we can share information. So what this is a graphic of is, if we look at the circle on the right, you'll see traditional finance. So there are a few banks, a small number of financial institutions in the middle who will interact with each other. So Bank of America and Chase deal with each other, wire money between each other and share information. And around the edge are people like you and me, wherever we're dialing in from today. You'll notice it's not all people, but there are small numbers of people. So in the US, yes, almost everybody may have a bank account, but there are large parts of the world that don't, and they're underbanked or unbanked in terms of having access to good financial security to deposit their money and feel that it's safe and save. On the right, what's happening with this new term DeFi, which is short for decentralized finance, that puts all of the people around communicating with each other and all of this stuff in the middle. These old dusty financial institutions are not there anymore on the right. It's taking the middleman out of the finance of banking. So we see all of the new products that we want to access, the investments, the materials, the products, and we can all reach in and negotiate with each other without having the intermediary of the middleman in there. So it should be much more efficient, it should be much faster, and it's using what's called a networked model. So you may have heard about platform-based networking between different institutions or different companies. And what that means is that it's using the signals of all of the different users to have communications with each other without having to have a middleman intermediary charging us all a fee to do our transactions and to wire money, to buy products, and to communicate with each other. So there's a lot that's similar about 150 years ago, but this whole efficiency and having it be cheaper and hopefully friendlier, more accessible to the whole world. If you have a cell phone, whether you're in the US or in Europe or in Africa or in Asia, then this sort of new technology gives you a bank in your back pocket. So if you're using Apple Pay today, there's no reason why people in all around the world, even if they don't have traditional access to financial institutions, won't be able to have the same banking opportunities that we do. So it's a brand new model. The future will be bumpy and maybe slow for a while, but it will streamline our costs and it will offer opportunities that are customized just for you. So yes, there are risks to it. Yes, there are hackers, there are security risks that need to be ironed out. There is some inherent bias in some of the models of the way the networks are built that we will have to work our way through. But this is an area that you as consumers, as people that use banks and the people who operate in the business world, this is a revolution that is already underway. It's very fragmented at the moment, but it's already going. So this is something that you need to be on the forefront of understanding and knowing about. So let me have a pause here just for a sec before I go on to the third section and take a look at some of the questions here. So Larry asks, does decentralization produce more fraud because it's harder to regulate? So yes and no. So that's a great question. It gives opportunities for fraud in the traditional sense. So there are ways to hack into systems that are built on the traditional platform. But what decentralized finance does, the technology and the network platforms that it's built on are actually very much more robust. They're so different and so much more secure because rather than a few people owning the security and the information, they're built on platforms where everybody shares the information in the whole network. So it's very difficult to make fraudulent changes in the way that you can change. Maybe you can forge a check. I could steal your credit card and I could go into the supermarket and swipe it. The new platform and the new technology is very much more secure. So if you use your Apple Pay, it has to look at your face, or you have to put a PIN in or put your fingerprint in. So there are security measures built in to the new technology that don't exist in the old technology. But there will still be hackers trying to take advantage in a new way. But the whole platform is built to be very much more secure. Gary asks, is it protected by the FDIC? So that's a great question too. That brings up a great point of the fact that this industry is just starting out. It's very fragmented. There are hundreds and thousands of different companies trying to build this new platform, this new network. And the regulators are woefully behind on keeping up with the regulation of the new technology, which is always the case when there's a real revolution going on. If you think back to when the internet boom was just starting in the late 90s and the early 2000s, it wasn't regulated. It was very fragmented. There were very many companies trying to operate. There needs to be a consolidation in this industry where the big players, which are trying to catch up, are able to acquire some of the smaller players and make it more robust. But it's definitely going on. The big banks, the big investment banks, commercial banks are definitely playing catch up on this at the moment. And they know that this is an area that they need to get into. So for example, JP Morgan, a couple of years ago, if you were an employee at JP Morgan and they caught that you were trading cryptocurrencies, they told you that they would fire you on the spot. Now, 2 years later, JP Morgan has actually launched their own cryptocurrency, JPM coin, and they're offering this sort of networked, decentralized platform to their customers. So they're trying to catch up. They'll do a lot of acquisitions, and they will still remain big players in the industry. But at the moment, it's still very fragmented with startup companies. But it's an area that to definitely not shy away from because it sounds too complicated. It's something that will simplify and make our lives much more efficient when it's fully in place. All right, so I'm going to switch gears now just for one last time and show you another really important graphic about how to tell where we are going. And this is more long-term. This is a little more about the future of our world. And I'll just ask a quick question while I take a sip of water. Does anyone recognize what this is a flower of? What plant are we looking at here? Because it gives a clue to what I'm going to talk about. So pop into the chat if you have an idea of what flower you think this white plant might be. It does look a little like a jasmine, but it's not. Anyone else with a guess? Al guesses iris. Lily guesses, Linda guesses lily. Soy, vanilla. These are all good guesses. So bear with me for a moment and it will become clear what I'm going to talk about. So my next really important graphic is taken here from Bloomberg. This is a screenshot. I'll show you the live version in a moment, but this is a screenshot. I want you to have a look at this map. It's a world map, obviously. I want you to take a look at it, and by picking up on the clues, have a guess of what you think this map is showing us. So write in the chat what you think this is a map of and why it's important. So Al says ships, that's right. Container ships, says Howard. Position of freighters, shipping traffic, trade traffic, shipping routes. These are all great guesses. So this is obviously something to do with the ocean, right? Apart from very few spots, like on the Amazon River, over here in Russia, this is mostly ocean-going dots. So you're quite right that this is shipping routes, container ships. Let's see if we can probe a little more. So where do you see a lot of container ships? So the Persian Gulf here is very full of, lit up a little like a Christmas tree, the Persian Gulf. The Strait of Malacca over here near Singapore and Malaysia is also very, very busy. But basically there are ships everywhere on the oceans, on the main trade routes. This West Africa coast all the way down to the bottom is very busy. Port, someone guesses that it's port. So this is, let me tell you what this is. This is real-time data of, there we go, of vessel tankers that are transporting liquids or gases of fuel. So this is tankers that are carrying oil, chemicals to be used for fuel, natural gas, liquefied natural gas, or liquefied other products like butane, like you may have on your barbecue, all around the world right now. So what I'm going to do, I'm going to go rogue for a second and try and show you, hopefully this will work, just show you the live version of this map. So I'm sharing with you now my Bloomberg screen, and it's the same map, but not a screenshot of it. This is the live version, and it's so interesting. I'll tell you a couple of things about it. So there's the label. Now I've taken showing you what the title is. Down here is the scale. So the color going from yellow to orange shows you how full the tanker is. So these ones here that are pale yellow are empty, going back to where they came from, or going back to somewhere to pick up more fuel. The ones that are red are full of fuel and are on their way to deliver it somewhere. And the cool thing about this kind of alternative real-time data is if you point at one of the ships, it actually tells you the name of the ship, what it's carrying, where it's going. So this one down here in the South Pacific is on its way to Chile, and it's carrying chemicals and oils. It's run by Maersk, which is the biggest shipping company in the world. And so it's on its way here to South America. And you'll notice, therefore, that the ones that are on the Amazon, the ones that are over here near the Caspian Sea, they are also fuel-carrying ships that are taking the fuel. We've all been listening a lot in the news at the moment about the Ukraine and their natural gas pipeline of Russia supplying gas to Europe. So this is only showing you what's on the ocean. So if you imagine adding in the trucks that are carrying coal, the pipelines that are carrying natural gas across continents, the trains that are carrying fuel across the United States and across Europe, this is showing you how, despite the fact that we are trying to become less reliant on fossil fuels, this is what's going on at the moment. The demand for fossil fuels and crude and coal and natural gas at the moment is explosively more than what the demand for it is. So when you hear in the news people talking about whether Saudi Arabia, which is a very powerful country in the supply of our fossil fuels, when they're wondering whether to increase their supply with prices with crude oil at the moment at $92, $93 a barrel, it's very tempting for them to want to keep crude prices up there. It means that the value of their assets is very high. And this graphic here shows us in real time how we are absolutely critically dependent on fossil fuels. It also shows us, I'll go back to my PowerPoint just for a second. It also shows us how change is coming, right? So number one, we need to reduce our reliance on fossil fuels because it's causing climate change, and we need to be less reliant on petroleum because it's flat out the right thing to do. And lots of countries and companies have targets for the middle of the century so that their carbon usage and their carbon footprint is lower. But also, we have to do something about it because we are running out of it. And at the moment, we are so heavily dependent on it that we need to be looking ahead to how this change is going to be affecting us. Where are the opportunities in alternatives, in manufacturing, in whatever industry you're in? We are going to have to look for changes. So when we're thinking about where we want to even take our next vacation, we're going to have to think about how the future of transport and tourism and travel is going to change, because the more red dots you see on here, the more full tankers you see, the more we are depleting the limited fuel, petroleum-based fuel reserves in the planet. And we can use this kind of data to track in real time what our dependence on fossil fuels looks like. So we want to obviously see fewer dots over time, but we also want to see paler colors over time. We can track this, hopefully in 10 years, we'll be seeing less of this, fewer dots on the map, and working towards the targets that we have to cushion ourselves and have the transformations of technology and manufacturing before the supply of this globally runs out. And companies are getting on board with this. They have action plans to lower their carbon emissions. But in the meantime, what this is doing to many of the industries that we depend on is really very damaging. So the reason I showed you that flower was it's actually a coffee flower. And since we're here at breakfast time, drinking our coffee, talking about business, I just wanted to show you one example of an industry, a commodity that is the one that is the most sensitive to climate change. So you can see here that there's a map of where most of the coffee in the world is grown. It's called the coffee belt between the two tropics. And the reason that coffee is so affected is that when it grows, it's very, very sensitive to very particular conditions. It likes to be on cool mountainsides that are chilly at night, and then have dew in the morning, form on the berries, and then in the afternoon have hot afternoon sun to ripen the berries. It's also an industry that's highly dependent on the cost of fuel, because these are the areas where the coffee is grown, but the areas where the coffee is processed and sold are usually in different parts of the world. So it's very sensitive to all of those tankers that you saw on the previous graphic. And the finance industry and the way that we're all living needs to come up with a way to address how these coffee farmers will be able to carry on with their industry without having to destroy this industry before climate change and other issues such as fungi that grow on the plants and the type of farming that they do, soil retention, all of these things have damaged this commodity market. So countries and companies are getting behind this, but it's something that we need to be disruptors of rather than disrupted. And so that graphic was one that just shows how important it is, You can have whatever opinion you like about climate change and about the effects of things, but these are just facts about what is happening. And change is coming to the way we live and travel, and we need to operate on the frontier of this sort of long-term transformation within the global energy system to find opportunities to live and operate in a world where our planet is better protected, and some of these other knock-on effects don't destroy industries that we are dependent on. All right, so I guess that I'll look at the questions in just a moment. I guess the last thing I want to show you is just to recap. So the three graphics that I want you to take away from today is just how innovation is driving the future across the industry and across the world that we're living in. It's affecting us all. Data is now instant. Banking is becoming faster and cheaper and more efficient. And we can harness this data to head off future crises if we're aware of the information that's coming to us and use it to see the big picture of where the world is going and focus on the longer term. So that will be done by steering capital towards projects and companies that align with our efforts to make the world a better place and to be on the forefront of some of these changes rather than just reacting to them. And those are my main things that I'd like you to take away from this morning. So let me take a moment now before we're out of time just to have a look at a couple of the questions. So Jeremy asks if I can share the website for the tanker data. So that's actually something that's proprietary to Bloomberg, which is a financial platform. So it doesn't come on a website. They do allude to it in their Bloomberg news articles. So if you go to bloomberg.com and search for shipping vessels or fuel vessels, then they every now and then will put it in their news reports when they talk about the industry. But it's not something that's publicly available on a website. So Howard says, heavy dependence on any one product will tip the scales of supply and throw us into a spin out, destroying these industries we're currently dependent on. This is an opportunity to seek out and grow other industries to combat the need and provide the necessary supply. Absolutely. So that's necessity is the mother of invention. This is why it's all affecting us. We need to take the opportunity to look for different ways ahead. So let me stop sharing my screen there. And I guess the last thing I'd like to say to you just is to tell you that one of the ways that we're addressing the analytics and the data and the bar just rising right across business and the finance industry is that we are addressing that by launching a new program ourselves at Goizueta. As Pam mentioned at the beginning, the Master of Analytical Finance program, which I'm the academic director of, is something that we're starting to address this need for just the fact that to answer big problems, we need to be aware of all the information that's out there and know what to do with it, how to draw conclusions from it, understand the way the world works, and keep all of that in mind while going out into business to solve some of these big problems of the future that we're addressing. So if you know someone who's an excellent problem solver and is looking to get into the finance industry, who's an analytical sort of thinker, and wants to pick up a comprehensive knowledge of this sort of material and of knowledge of the global markets and how things work with an interest in going into the financial services industry, then please look into our MAF program that launches. We're currently in the middle of admissions and it launches with students arriving in August. And that will be in Atlanta on Emory's campus. One more question from the Q&A. Are we not still dependent on large institutions to take physical currency to digital? So the network will work once the money is digital, but the conversion of physical currency to digital is the control. So yes, so the digital currency market at the moment is a mixture of some of these new technologies that call in currencies in the traditional way that we usually think of currencies being some representation of value of something. Some of the cryptocurrencies, so Bitcoin is the most famous one, Dogecoin last year, they are very different. So they are not the transfer of wealth from a traditional currency to the a digital format. They are something that's completely new and quite different from the other type of currencies. So you hear the central banks talking about whether, for example, the euro should have a digital platform. So I think that's what this person's talking about, transferring the traditional currencies to being digital. Those are the ones that I think we need to keep an eye on, because that will be the way that we're forced to change how we transact in the future. Then there's this other, more of a startup area of cryptocurrencies that, yes, that's very different, and that's not the transfer of a traditional source of wealth into something. Those are sort of their own animal, where there's a lot of mining, and that has a lot of global impacts as well. So the digital currency market sort of has two main flavors, at least at the moment. And some of them, the more traditional ones, yes, they need to be converted to the physical to have control of those, of the values. So that was a great question. And thank you, Gary, for liking my accent. That's very nice of you. When I talk to people who are British, they now think I don't really sound very British anymore. I think I'm somehow stuck like one of those tankers somewhere in the middle of the Atlantic as far as accents go.
I've heard you say that before, Kirsten. Thank you so much for joining us this morning and sharing your insights. It's so funny. I think about, my own thinking about currencies and digital currencies and the cryptocurrencies. And we've had some lively conversations at the business school about where things might be headed. So it's fun to hear your perspective on that. So thanks again for joining us. And before we go, I want to share a few things with our participants this morning to let you know what's coming ahead for our Business Over Breakfast sessions. So there we go. I was having trouble finding the right screen. Let's see, there we go. So coming ahead, we are being joined by Professor Roy Black on March the 3rd. His topic will be on, dude, where's my investment yield? REITs to the rescue. So Roy is a real estate expert, and I think this will be a lively conversation and insights from Roy. And you can see here some additional topics that will be coming up this spring and summer as we look ahead for continuing series with Business Over Breakfast. And before we head out, just a few notes on our upcoming courses. If you are looking to up your game as a leader and a navigator inside of your organization, Managerial Leadership Program is one way to enhance your self-awareness and your leadership. Executive Communications and Leadership Presence is really focused on helping you to influence and understand how people perceive you and how you can better influence inside your organization. We have a growth marketing series coming up. You can see right here. And then leading and inspiring change is always, especially in the times that we've been facing, an impactful program for leaders in the business. We want to thank you for joining us today. We look forward to seeing you on our future Business Over Breakfast webinars. And again, we want to invite you to complete just that 2 or 3 question survey. Let us know what your key takeaways were from today's session. And we look forward to seeing you March the 3rd. Take care and have a wonderful rest of your day.